What's going on, guys? Welcome to another deep dive of the market. We've seen a pretty beautiful bounce at the 385, 384 level, but we still have a lot to pay attention to as we have a lot of earnings, especially for retail coming up next week. We have Walmart, we have Home Depot, Cisco Systems, and many more. So today we're gonna start up fresh with a few things. First and foremost, we do have the Fed speaking this week. There's a lot of Feds talking this week, right? So we most definitely have to pay attention to that, and we have to act accordingly, right? So here on investing.com, you can most definitely see where, you can most definitely see who's talking this week, right? Click on this week. And then you could go from Monday the 16th, right? This is Monday the 16th, go to the US section, right? And then we'll actually tell you what's actually going on that day, right? FOMC member William speaks, right? Fed Williams, he's one we got to pay attention to. We got Fed Williams speaking on the 16th. We do have EU GDP on the Tuesday the 17th, right? And also on that same Tuesday, we got Powell speaking. We had Bullard speaking. We had Mester speaking, and we had Evans, right, speaking as well that very same Tuesday. And you guys can actually see all these information here. Not only that, we do also receive the core retail sales numbers, which you're gonna have to pay attention to, right? And it's okay because we also have retail's earnings coming out after tech, right? We have retail, so you're gonna have to pay attention to it, especially paying attention to the consumer spending report, right? Sentiment. So those things are pretty key. Now, one thing we have to pay attention to, Friday is monthly OPEX, right? Expirations. So money. So we have to pay attention to it. What is the max pain in the market? Things like that. But yeah, so first thing and foremost, you want to make sure how volatile the market's going to be. And this is one website that I use. The link will be in the description. You could click on it. You could download on your phone, your tablet, your computer, and actually, go to it. Another thing that I like to do is go over FinViz just to kind of see what has the week, what happened for the week. There's a lot of stocks that are still down pretty nicely, so we're gonna have to pay attention to all those stocks. And you could actually go from a monthly perspective, and I like to look at a 1-year perspective and things of that nature, so you get to see, right? If you look at a year to date, right, from the beginning of the year, a lot of these stocks, Apple, Microsoft, they're down more than 10%. Look at Tesla, 27%, Amazon, 32%, Google, about 20%. So pay attention to it, because now we might have an issue where the Fed is going to pivot, just like they did when we spoke about inflation is transitory. So we're going to get into that just a minute, but I really wanted you guys to, these two things, those are very easy things to do just to kind of see how bad these stocks has fallen. All the attractive non-terms of valuation, which at the end of the show, this video, I will actually talk in regards to Ray Dalio, believe that we're in a bubble. And he states about a couple points in which he thinks why we're in a bubble. First, the high prices relatively to traditional measures of value, and unsustainable conditions, geopolitical issues, we got inflation, and we have the Fed trying to do whatever they can to actually combat inflation and things like that. And also, we have a lot of new buyers in the market, and they could be naive, and the only thing they know, we want to buy when the stock actually goes up. And then we have a broad bullish sentiment, which is actually getting lower and lower and lower. A lot of these purchases that's been done, right, has been financed by debt and not actually cash, right? So now we have a lot of forward speculative, he says, that was made to bet on price gains, right? Now, I'm gonna get into it. I just keep in mind. Also, I'm gonna keep the link there as well, so you guys could actually see. But this is the article here, right? This is the article here in which he actually states all these reasons as to why he believes tech bubble stocks still not safe. And that bubbles may take a long time, right, to unwind and typically go to the opposite extreme, right? So which brings the conversation of the fear and greed index. We did see that the fear and greed index right now, it's at extreme fear. So we know the analogy where with Warren Buffett strategy where whenever they're too fearful, we buy, and whenever they're too greedy, we sell. But this time around, there's too many negatives at play where it might just be not just that. We don't just need that. We need things to actually be in compliance with each other for the market to actually retain certain levels and to keep going higher. So we most definitely will go over some of the key things. One key thing that I want to go over specifically, technically, is the VIX, right? Now, before I go, let me see. I want you guys to pay attention to this, right? As a rule of thumb, right? And you also got to be students of the market, continuously reading and understanding certain things so that when the volatility is elevated as such, when the volatility is elevated as such, you're not actually panicking, right? You're not actually panicking. You're not actually panicking. So VIX values greater than 30 are generally linked to large volatility result from increased uncertainty, risk, and investors' fears. VIX values below 20 generally correspond to stable stress-free periods, right? So which means now, can the market bottom on fear? That's the question that you have to ask yourself is, can the market actually bottoms on fear? Having that we have geopolitical tensions, we have potentially, like Ray Dalio said, we're in a bubble, right, where prices are high and we're steadily declining. So all those things we gotta really pay attention to. So market has an unorderly decline, right? Certain levels we want to pay attention to, but especially with the VIX that I just explained, let's actually go over screen 4 real quick. Let's switch over to the screen 4. There we go. So this is the VIX that I've been tracking. We broke out of this little falling wedge and whatnot, right? And before, when I actually went long the market around that 405, it was because we did see the double top pattern with a tap and tail, right? Which I actually posted it in the group, right? The tap and tail often precedes a correction or crash in a stock. In your analysis, right now would be the VIX, right? So if you learn this pattern, you might be able to avoid nasty drops. This pattern is very similar to the top and tail. The difference is that the super top and tail has a longer tail. And that was this moment right here. So we're seeing if we could get the same thing here, but let's see if we could get this thing under 25, right? If we get it under 25, then we can see SPY move a lot higher. But this is the threshold for 11. 416 to be exact is my point that I'm looking at. But 411 is a very key level in which we're going to go over. All this really tell you is how elevated volatility is, or is it low, right? If the market needs to continue to go higher, we need volatility to stay low so we could increase higher, right? So that's what we're looking at as well before we move into SPY. Let's actually get into SPY real quick, right? There are certain levels that I'm paying attention to on SPY. So let's actually start on a new chart. Right, there are certain levels. This is the monthly chart that I'm looking at. We broke our 20-day. We're still haven't reached our 50 yet. Volume relatively the same, right? So this is that 384 level in which we're holding pretty nicely. If you go on a weekly chart, it'll put everything into perspective for you. And if you want to draw a trend just to kind of see, you know, what trend it has broken, right? What trends are we retesting and things of that nature, you'll get to see that. So this is a trend that we broke, excuse me, this is the trend that we broke, right? Created that inverted, that head and shoulder, shoulder, head, shoulder. Neckline of the thing is over here, right? And then now we dip lower. So now we're bouncing out a pretty key support area, which is the 400, which there was a little gap. You guys can see that gap here. Let me make it wide so you guys can see what I'm talking about. There was a little gap here that we needed to fill, right? So you guys could actually see the gap here, right? And then we actually broke beneath that. Now with this gap right now, we actually just completed what we called a 15% drop from the highs of 480. You guys could actually measure even more than that. That was about 19.64%, excuse me. And that's exactly what they were actually asking for. Now, another thing I want you guys to be clear of, and I think I read somewhere this week where Bank of America said around 427, 430, there was about $1.1 trillion, right? So let's actually look for it. 427, 428, which is literally the neckline of the head and shoulder. There's about $1.1 trillion that's sitting right there, right? So right now we get a nice hammer here. If we can try to retest these levels, then we'll understand within the next few months or so, will these people still stay in those positions or will they get out? If we get a chance to retest 427, 430, then we'll understand, oh, they're gonna sell off because they don't believe it anymore and the market's having a hard time trying to go back up, or will they keep the position and actually buy more to push this market even higher? But also do understand that this Friday is actually expiry. We have expiration this Friday of a lot of different products, so pay attention to that. So the max pain for this market that I'm looking at could be that 400 level, could be 452, but we want to see signs that the bulls are in control. And right now we are not in control. So pay attention to the option chain, in terms of liquidity. Pay attention to the open interest and volume of certain contracts, especially the 400 with QQQs, and I'm looking at the 300 with the 400 with SPY, excuse me, and the 300 with QQQs. Now, there are certain things that we need to pay attention to that, I feel like they've dropped more than 75%. Like for instance, take a look at ART, right? Innovation ETFs. And it's back to the means, right? Reversion to the means. We've always taught that whatever goes up must come down. And then we've seen that from the levels in which of 2018, right? We went all the way to 170, 160, 170, and came all the way back down to 35, 32. Now, if you guys could look at it now, there's an actual trend that is actually going here. So we're gonna see if we could get that bounce pretty nice. Excuse me. We're gonna see if we get that bounce pretty nice to about, let's say, let's go on a weekly chart. It's gonna put it into better perspective. So we could see, yeah, so we could see about, let's say 52, get a bounce here. And then this is when, we start to learn more and more in terms of the psychology of the market. And if you guys actually pay attention, you guys could actually go look these things up. This is like a very identical chart of a lot of things, especially with SPY, with ARKK, and a lot of other ETFs, is that right now we're in a discapitulation here, right? Where we might get those relief, right? Those dead cat bounces, but we might actually come right back down, consolidate, right? For quite some time until we get a move, right? Something has to happen. We have to have a catalyst. And if you guys look over ARK right now, it might be that period where ARK can actually have these bounces come right back. We see the elevated action and volume. So there might be a chance that this thing actually falls further, right? So let's see how, Kathy would choose to rebalance the portfolio and things like that. Well, she sells quite a lot of stuff in there. Let's see. But right now, we had a nice, pretty move this past week from a low of 35, 34. That's literally a $10 move to 43. So we have to pay attention to these things, right? And again, we spoke about the Fed speakers that's coming this week. We have EU GDP coming out, so we know they might actually speak in regards to stagflation. But now we see that the Feds is actually starting to pivot, just like they did with inflation. Now they're doing the same thing with recession, right? So I have a couple articles here, and I'm not gonna take too much time going over them, but these are the things that I do. Sometimes I just read just to try to get a deeper understanding of what's actually going on. Look at this. This is the sound of the Feds pivoting. The Feds sound as if it expects a recession. The central bank's chief's confidence that the economy can avoid a downturn has taken a beating in just more than a week, right? And you guys can actually go read that. But now this is just a conversation of, okay, they're looking to pivot and they're looking to make the proper moves. Having that, we have unwinding of the balance sheet comes June 1st, right? And selling may go away doesn't really perform really well, right? This is when there's less activity in the market. So if the market cannot actually find a good reason to go up, then in June, when they actually start unwinding the balance sheet, that might actually cause more pain to the market. So technically we're looking above 415, 416, 430 is that threshold that we're looking at, right? Over 432, we exit the correction territory and for a potential bull market, right? So the inside support in that sense, we're looking at 386, which is the weekly higher low, 395, which is a very psychological point, right? This is a structural point in which we have to pay attention to, 395, 400, which, you know, like I said earlier, the 400 would be the max pain that we have to pay attention to. Now, this is, you know, this is an article that pretty much would support that the Fed is actually pivoting, which is not such a good thing, but we'll see. So pay attention to how they speak this week, what they say, economic projections and things of that nature, leading to the unwinding of their balance sheets. Another article that I read is that US recession odds within the next year now 30%, survey shows, right? So this is the first paragraph here. The probability of a recession over the next 12 months is now 30%, the highest since 2020, according to the latest Bloomberg monthly survey of economists. That's up slightly from 27.5% in April and double the odds economics predicted just 3 months ago, right? So read over these things and try to get a deeper understanding of what that is, right? So now we're not gonna spend too much time. Let me just go over the Ray Dalio article, and then we're gonna move into a little bit of technical, right? Breaking some stocks down. So now, Ray Dalio said tech bubble stocks is still not safe. This came literally on May 10th of 2022, right? High price tech stocks have been battered in 2022, but they're not nearly as expensive as they were in 2021. Might a bottom be near, right? And this is his response, probably not. The world's biggest hedge fund. So in January, they said that he won his proprietary bubble indicator suggested that US market was on the edge of a bubble and that emerging technology companies like Tesla were clearly in extreme bubble, right? In which sometimes he's explained that, you know, the unwinding of these bubbles might take some time for it to happen. And we saw 2020 from the crash, and 2021 stocks were just going crazy. So it literally took about 1.5 to 2 years for a lot of these major tech stocks to actually retrace back to their means. And he speaks in regards to additionally, retail investing activity and leverage has returned to pre-COVID levels, while sentiment is bearish. He said the bad news, bubbles take a long time to unwind and typically go to the opposite extreme, overcorrecting to the downside before eventually settling at normal levels, right? Something to pay attention to. Now, let's go back to the 6 points in which you mentioned, right? the Ray Dalio bubble. Number one, he said that high prices relative to traditional measures of value. Number two, unsustainable conditions, geopolitical tensions, inflation, right? Three, many new and naive buyers who's coming into the market just because it has gone up from 2020. People felt that it was easy to trade, right? Easy to invest because that was just the new norms because people didn't know what the hell to do with themselves, right? The fourth thing is right now, broad bullish sentiment. The fifth thing which stood out to me was the fact that he mentioned that there was a high percentage of purchase being financed from debt instead of actual cash value, right? And then the sixth thing is a lot of forward and speculative purchases made to bet on price gains. Now, in the article, we saw that he talked in regards to his bubble indicator, which was approaching about 70% of the peaks last seen in both, I believe it was in 1929 and 2001, which basically suggested that some stocks were severely overvalued. Coming into 2020, it was a question of valuation, right? And these stocks would poised to crash under the right conditions, which could be the same thing that we have right now, right? But the right conditions, which is worse condition because the stock's going down, the war with Ukraine versus Russia, inflation, and COVID, right? Now, let's go over, give me a second, let's go over the last point, which I found it to be very, very interesting. Now, the more people believe the market is going to crash, the more it is likely to do the opposite of that, right? It's kind of like the Warren Buffett strategy, like I mentioned earlier. The greedy people get, you sell. The fearful people get, you buy, right? But now, we're at extreme fear. So if you guys go to CNN and check the fear and greed index, you would see that we're at extreme fear, which could actually create a great buying opportunity. But is this time the perfect time to do so, right? So one other thing we have to pay attention to is recession with the Fed pivoting, right? After all, recessions follow peak euphoria, right? Not peak fear, right? So we have to pay attention to consumer sentiments. Is it going to drop? This is the reason why with retail's earnings in focus, we need to pay attention to that just to kind of see what is consumers' confidence in the market right now, right? So if consumer sentiment drops and bullish sentiment is at an all-time low, right? This would generally indicate that, hey, it might be a good time to buy, right? So this is actually very important because the average investor, guys, is almost always wrong at the most crucial times. We saw that back in 2020. We even saw that back in 2021. And we're actually seeing that right now in 2022, right? So if a person believes price will continue to go higher, usually that's a sign that possibly things are going to get worse. So we don't want to play certain games in regards to, I know this is going to happen. This is why one of the things that we've been doing is actually trading on a quarterly basis, and by which we're only doing the wheeling strategy, right? And one of the other things in regards to taking advantage right now, which might be a little bit tedious and a lot more time you're waiting for, is we're actually practicing doing married put and protective put. Now, one of the ways in which if you want to buy something, you don't want to have to buy it outright, right? You could actually go and sell some puts on it and have the cash as collateral, right? As the cash as the collateral, if it drops more from the levels in which you sell the put, then you get assigned the stock. Now, let's say you want to be bullish and you're like, you know what, I don't want to trade options. Let me actually buy the stocks. I would suggest that you most definitely get approved for option trading. At the same time that you're buying the stock, purchase a put option on the stock, which would give you the right in case worse come to shove, right? This stock actually falls 20%. or drops 20%, you could actually exercise that put option. In most scenario, you might actually be able to stay in the stock that you're in because you're making so much more money on that put option, right? You're buying insurance. And at the same time, with the will strategy, you could buy that put option in order to protect the course in which you bought, right? And at the same time, you can sell calls on a position to get some premium as you sit on those shares, right? It's all about being safe, practicing risk management. But in regards to that, investing can actually be pretty overwhelming. And we've seen that ever since October of last year, that the market has been very speculative and very volatile. So if you haven't been in the market for quite some time, this might be new to you, like, okay, I'm making a mistake. It's just, when is the best time to buy? Don't get into margin calls, and buy in increments, right? Don't put all your eggs in one basket. So to me, the best diversification is to simply, right, invest on a consistent basis, especially through all this volatility, right? And you want to do that throughout as many different sectors as possible. Or sometimes you're doing your research very, very well, and that you use the options in order to hedge against your position. If you're going long, you want to buy some puts just in case the market drops. And you want to make sure that the allocation of funds has a pretty good ratio to it, right? And invest in many different sectors as possible. You're looking in terms of stocks, you're looking in terms of real estate, you're looking in terms of cash, because cash is also a position as well. And of course, maybe a little bit portion of your portfolio can be allocated to cryptocurrency, right? I'm not a big fan of crypto, but I do hold some as well. And the cheaper it gets, if I have the money, the little by little I'll buy some, right? But the whole point in this is to understand that price will fluctuate outside of your control for a reason that sometimes makes absolutely no sense whatsoever. And it is up to you to understand how to maneuver your cash properly, not to panic, and just understand the bigger picture. And this is where your conviction actually comes in, right? So some of these things that we actually went over today, I will actually post them in the description. You guys can click on it, read over it. But now let's actually do some charting of some of the major stocks in the S&P. So first thing we're gonna do is we're gonna actually start with Apple, right? So let's go back to the main charts. We're gonna actually start with Apple. So one thing that I'm realizing on a weekly basis, right? My interest for Apple is 135, 130. Been waiting for it for quite some time. I might actually buy, but this is a great support area, which we saw. It bounced at 138, popped right back to 147. Really, really beautiful move. But nonetheless, we still see that volume for bearish is still elevated. So we actually broke the bigger trend, right? We actually broke the bigger trend. So we might actually have a continuation unless Apple comes above 155, bounce over here at these levels and continue the uptrend, right? But that came from a double or triple top formation, right? Break of a neckline, which is over here, 157, 158. And we broke the major trend line from the lows of 2020. So we're looking at October of 2020. Am I right? October, September of 2020, like you see here. Right? We break that range, and we have elevated bearish volume. So we really have to pay attention to protect your portfolio. And this is the same thing I believe Microsoft did. And then let's see what happened. Boom, sell off. Microsoft is still not safe. It broke a major structural level once it broke that trend. Now it might take time. It broke the structural level, broke the 50 EMA, continuation, elevated and bearish volume. Next level to stop is about 235, right? 240, 235. So we're going to have to pay attention to that. Very, very, very important. It's very, very important. Can we get a bounce in those stocks? Most definitely. We would need to break above 270 and we'll see, but it's trading under all type of EMAs. On the daily, we have a bearish indicator here with a 50 EMA cross under the 200 the 200 SMA. And that's pretty bearish. So support level would be over here, 235, 234. Then, you know, that's a pretty nice buying opportunity here. But again, like Redalio said, it might not finish yet. This will be about 30%, completely in bear territory. What else? Another one that did that was Google. You want to pay attention. Google actually corrected pretty nice, right? But I still feel like Google can come to 2092. So we're going to see here next week what actually happens. Can we get a move above the threshold of 2440, 2430, 2440, then have a nice retest of 25, right? Again, head and shoulder, break of a trend, continuation. Okay, let's take a look. Amazon, right? Amazon, break of a trend, same thing, right? We had a nice trend, break it, retest of a trend, take the 50 out below 200. Now we have a nice little pin bar happening here. So we're going to see how that plays out in the upcoming weeks, right? We know the split is coming for Google, Amazon, stocks like Shopify. We want to see how it performs going into next week, especially with the Fed speaking. It's with the Fed's pivoting as well. That's going to be a pretty big issue for us, right? What else are we going to go over? Apple. Shopify is one of our holdings, how we've been getting. Shopify came back down pretty nice. And we saw a lot of buying opportunity here, especially with the CEO putting about 10 million around those levels. So it was perfectly the perfect spot to buy. So now we're going to see if it can actually stay above the structures of full 5 and have a continuation for a retest around, you know, these levels here, 530. And we will be sitting pretty nice on this trade, right? Pretty nice on this trade. And then one of the things that I bought at 400, I kept selling calls on it, making about $1,000 a week, just willing in $1,000 a week. And at the same time, I sold the 300 and the 350 puts for next year. And I'm still making money on it on this push to the upside right now. You know what I'm saying? So these are the ways in which you don't have to outright go buy the stock. You can literally use an option in your benefits. But most people don't understand that because they want to make 1,000, 2,000 X per year. I mean, per day, per month, right? Slow is the way to go, right? So we're actually going to look at that. But again, same thing that happened with Shopify. Reversion to the means, broke its major trend, came back to where it started back in 2019, 2018, right? And then we're going to see if we can actually stay above these levels, 420, right? We're going to see if we can stay above these levels. Now, another stock that I've been picking up, you guys seen the video, Netflix. I think Netflix is at a decent valuation, right? Netflix is at a decent valuation. Hold on, let me see if I can get it. So Netflix is at a decent valuation, guys. And the reason I like Netflix right now, excuse me, I don't know why this is showing up like this. Okay, so I'm using the EMAs here. So the reason why I like Netflix is because it's actually sitting on that 200-day. Now, this is the EMAs. This is the SMAs, right? So we're looking, there still could be a possibility that we get a move down to the structures level of over here. There's a possibility that we get that filled, right? Let's actually put that there. We're already there, but what I'm realizing here is it's spinning top here. So we're gonna basically see how this month ends and how the next month actually continues. And we're gonna see if we can actually go above, right? We're going to go above 200. That's our target for next week. The major structure that I wanted to go back to is that 262 level, but we could actually see that we're completely at oversold area, right? Completely at oversold area. And then we kind of want to see a shift and momentum in terms of buying. And again, I'm pretty excited in terms of the advertisement business. that they're looking into going into the new year, this year, a couple quarters, the Q3 and Q4 into next year. They're looking to bring that out. So I'm basically waiting to see how investors react to it. We saw that, like Darius was saying, some of these stocks was an extreme bubble. And we see competition is rising with Disney Plus, Comcast, and things of that nature. So, you know, Netflix is been in the game for quite some time. I think that they will make it through it, you know, 5-10 years later than this. So that's the reason, again, I've been buying. I bought 200 shares, right? One was at 213 and the other 100 was at 165, right? So now the other one that I did, I sold the 130 puts for next year, right? If the stock goes there, I want to own it. If it doesn't, give me the premiums. I'm not mad. I already got 200 shares. And that 200 shares bringing me about $800 to $1,000 a week, if done correctly, through cover call. Okay? Through cover call. So now let's actually go over SPY, which is very interesting. All right, let's go over SPY, which is very interesting. Now, one thing we could see is the fact that SPY has actually broken its trend, right? We understand that. We understand that it broke its trend. Big bearish candle here, right? Engulfing bearish candle here, but I still haven't seen too much elevated volume here. So we're gonna see if the threshold of 427 could regain, because every time we go test that, it basically rejected. And this is where that $1.1 trillion is actually sitting. So we got to give these people a chance to see if they're going to hold if it comes back, or will they offload those shares and get out, right? Offload those shares and get out, right? So we want to see that. There's still certain targets that we're looking at where, what is it, 360? Right? We're looking at 360. You also got to look over here as well. And it's very important to understand how to draw your support and resistances, even based on the Fibonacci level. That could most definitely help. Let's see if I could throw in some fib retracement here. Right? Let's see if we could throw in some fib retracement here. Look at how it's sitting literally in between a 38 and 50% retracement. So this is where we get in that cap bounce, is at that 38% retracement. If you could come to that 50, then that's most definitely great buy, which would be bad for a lot of people's portfolio, but if you understand how to protect it, that's only a 25% drop. Quite a lot. Right? Quite a lot. But as you guys can see, right, that's not far off. We could actually get that. But right now we're at another structural level. Let's see if we can hold it, retest that 427 and hold it. We're possibly going to get a retest, right? Possibly a comeback. And then, or all these are possibilities that may happen, right? All these. And as you start going on a smaller spectrum, we can still get a move all the way to 412 and get rejected at the moving averages. And this is something that deals with this equilibrium. Every time you have the stock price or an ETF price, right, moving away from the moving averages, it always go back to test it. And you can see that everywhere. Anytime, look at this, left it, came back to test it, left it, came back to test it, left it, came back to test it, and even higher, left it, came back to test it, left it, came back to test it. So again, those are fluctuations. And if you're a trader and you're trading on an intraday perspective, then the market is actually beautiful if your execution is proper, right? If your execution is proper. So that's basically what we're going to look in SPY for the upcoming week. We do have a gap to fill back at 390. We're going to look to see if we can stay above these levels here. Right, but my main point is 427, 430. If we get above that, then that's pretty great, right? That's pretty great. So Tina, We're not seeing that. Stocks is not another alternative, right? 454, this is the pivotal point, I feel, in SPY. If we could get that, then we turn into another bull market. And this is literally, right? The head and shoulder, you guys could see. Once we could get above that, the head and shoulder no longer exists, right? Bulls versus bear fights for direction. Earnings confirm, move. Right? So there's a lot of these things, we just have to pay attention to it, guys. Let's take a look at QQQs, really. Look at this. There's still much more room to the downside, right? Still much more room to the downside. So we have to be extremely careful, especially in these pops. Sell calls on your position that you already have above the level in which you purchased them at. Could be 6-7 months out. Purchase in the money put options. If you were just starting to buy, for people who bought at the top, I don't know. You have to have a lot of cash in order to hedge properly. But that could be one of the ways in which, you know, those put options can make you so much more money, in which you don't even have to get out of your position. You could just use those cash to, you know, the profits from your put options to average down on certain stocks that you own. But I could see we come down to 267, right? 267. And you could actually put it in a little box here. Look at this. This is a very key level. It's the 50-day. Could most definitely do that. Let's look on the weekly. We're bouncing on that 200. Barely. But we can most definitely come to that 267 level, and that is around 277. That is still 30 points from where we actually trading right now. Look at the elevated in value. So please, please pay attention to those things. They're very, 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 very important. I'm not gonna try to keep this video too long. Last but not least, let's go over some of those ETFs like XLV, which is healthcare. Again, right? Look at this. They're trying to go higher twice after its first highs. 136, came right back under it. Now, can it actually consolidate in those ranges, right? And pop back up? Maybe we get a nice little pop here. People need their medicine, people need their healthcare, regardless of what the market is in. So that could be one of the ways in which we approach this thing. Let's look at tech, XLK. Technology, head and shoulder, right? We see it. We see the neckline, right? So now we have to pay attention to certain levels like over here. And we're looking at certain levels like, let's say, right here. And then of course you guys see the 200-day, right? You guys see the 200-day. But right now, it most definitely can come to these levels. And then you're also looking at over here as well. Understanding how to, you know, because you could actually see, right? Look at this, double bottom, pop, right? In a way, pop. So all these are major levels that it could find support at. This is why you see we getting these bounces here. Now, not every bounce is right at the wick or at the body of the candle. It could just happen. And this is why, in terms of the spreads, are the perfect ways to engage these types of tradings. Right? These type of trading. Look at, let's look at, what is it? XLU, right? Utilities. We're looking at utilities. Nice uptrend so far, nice rejection. Right? So we're gonna see what happens moving forward. And China right now is expected by Monday. Let's look at the FXI, the iShares China Large Cap ETF. They're expected by Monday, this Monday coming up, to announce more monetary easing because they're in a very bad predicament right now. Bad predicament right now, guys. Look at this. So we're gonna have to pay attention. This might create an opportunity here. Since 2007, does it break below it? Maybe. It's like an inflection point, right? Which brings us to the next thing. Let's look at emerging markets. EM having the same thing. Everybody's feeling this hurt. Everyone, right? So in the week ahead, right, for us, we're gonna want to pay attention to DXY. The dollar's ripping, right? We kind of want a retracement. It's almost there at that rejection level, 105, 107. Could even potentially go to 120, right? We're gonna see if we get a rejection from that. If we can get the VIX under 20, if we can get the dollar to reject these levels here, then we could have a nice move up. Until then, if we don't, if the dollar is strong, we're gonna see that the US 10-year is just as strong. Look at this. Right, this is something that I posted back in, what was it? Was it November of last year? Right, this is the expected move. Until then, the market will still be choppy. High interest rate equals a stronger dollar. If DXY and 10-year yield is up, weak market for tech stocks. Nonetheless, we are still in bearish trend. Now, if we break the 200-day, which we then will retest at 1.77. If we do have a rejection of the 200-day, I may expect equities to have a nice move up. If we didn't, if we break the 200 to the upside, expect equities to still be choppy and move further down. Now, if you look at equities, it is the complete opposite of this. This have an inverted head and shoulder, equities have a head and shoulder. So this is why it's good to go over certain things and keep doing your research. I mean, the market is volatile and that could be due to a lot of reasons, right? Could be due to a lot of reasons. So we have the price to earnings growth is also somewhat elevated, right? That was the concentration coming into 2022. But as fewer new investors come to the market, valuations have had a chance to come back down. Forward growth suggests there might be some room to drop. When we look at those PE ratios, when we go through the balance sheet, the income statement of cash flows, right? When we go over our liquidity ratios, if you guys check out YouTube, we did videos on all those things, how to pick the perfect stock, the basic fundamental skills, right? So forward growth suggests that there might be some more room to drop, but the shocker from all of this is bullish sentiment is at an all-time low, right? We have a lot of negatives. So at any point, the market could find some certainty, we could have a pop. So be safe, pay attention. That is all that I have right now for you guys. And again, this is the trade that I'm looking up for next week. Once we could have volume to back it up, we could have a nice move, right, to 406. That's where I sold over here to 406. Get a move here, then get rejected. We have a lot of rejection happening around these levels. Rejection, rejections. We could have another rejection, 4546, another rejections. Or we could pop it even higher, right? I don't trade the 1 minute or the 5 minute, but if I were to guess, this is a beautiful move over here. This could be a beautiful move over here. So above 4.3 could get a quick move to 4.6. But yeah, guys, this is it. And I will see you guys next time.